How is risk sharing? How does that shape the sense of community amongst Muslims who are involved in business?
So if we look at some of the different structures that are involved in Islamic finance, the one that's quite predominant is the diminishing musharakah, where the bank, so if you look to go and buy property, the bank and the customer, you'd enter into a partnership agreement, effectively, a musharakah, and the bank will put in 80% and you'll put in your 20% or your 10%, and the bank will own the asset on trust for you, right? And in that way, the bank's got its own skin in the game, because actually they are the named asset holder for this property. So that's one way of doing it. And more recently, without mentioning any company names or any sort of brands, there are other companies that are now doing sort of crowdfunding ways of sort of funding real estate. There are other companies that are doing buying shares in a company, and the company then buys the asset, and then there's all sorts of risk sharing involved there. They've also taken away things like late payment on interest, for example. So in classical banking, if you don't pay your debt on time, the banks can charge you late interest fees. Again, under Sharia, that's not allowed, and banks, Islamic banks don't do that. And there are some Islamic finance providers at the moment that will also say, in each month, we're not going to obligate you to make additional acquisition payments to increase your share. So again, these are all ways in which the bank is trying to say, look, we are in this together, and our objective is to help you buy properties, but without compromising your faith.
Yeah.
Protecting the consumer.
Yeah.